Hey traders, Nick Shaheen here looking at AT&T. Much like Snap, I think there's more upside here, but I want to do it in a couple different ways. So this is AT&T daily chart. It has had a nice bounce off of the last chop. So it is choppy. It's about 5-6% from here. Close the gap, and now what? Okay, so this is a well-known company. It's not expensive. I'm going to say it's in the low teens as far as the price to earnings ratio, which is the typical way one would look at. Yep, 12 and change. And just barely one-time sales, 1.3 times sales. So I know it has debt, etc., and all kinds of issues. I personally don't like their services. I'm canceling out of all of them, just because customer service, not because of the stock. All things aside, technically speaking, okay, so we have value below, right? So we have value below and opportunity above. I don't like this, whatever that happened here. Complete rejection of 33. So it has a few tests, and higher lows, lower highs came into a point. Let me come into like a lower time frame, and they decided to break out of them. So this is a resting point. So this is a a resistance area. I say area because look at it. I mean, it was a huge ledge here on earnings. It was a huge catalyst here. And then here back they are. So it's choppy, right? So how do I, excuse me, I'm still sick. How do I trade it? I could buy upside hopium. I could buy the shares and hope that they rally, but they're choppy. So I better be ready for zigzags. I could buy calls or call spreads, but how far out do I do it? I want out pretty far because I don't want to be right and miss out on timeline. So I would have to go at least July. Let me see here. Maybe even longer. I want something to encompass an earnings result because then the premiums hold up better if I'm buying. Or I could sell puts or put spreads, which is probably what I want to do. Okay, so let's talk about the chart itself. Choppy, right? So you can't tell. Too many big moves. And this week, it's probably rallying on the rate cut news. Not because it's good for stocks, because it pays a dividend. I bet you it pays a big dividend, like 5-6% maybe. I know it does. So anyway, it does pay like a 6% dividend. And if they're cutting rates, if rates are falling, the impression is that things like the XLP, the material, all the stocks like Pepsi, Coke, some big oil companies will catch a bid because they pay high divs. So instead of buying bonds, you buy the company that where the dividend yield is independent of what the rates do, as long as it is sustainable. And the dividend is not in question with AT&T, not that I know of. So from a daily perspective, this should be resistance zone. 32 through 33. I have a trigger for me here. So this orange line. It's not a hard line in the sand, but it's better than here. So I could jump the gun and buy the shares. I could do a buy right where I buy the shares and sell calls right away. Covered calls. Or I could do some sort of a call calendar. I've done a lot of videos on those. And the idea there is to buy a call way out in time and then sell a call against it shorter time. I can do a call diagonal, which is kind of the same thing, only different time frames. What is going on with this thing? Okay, so back to a daily chart. Now, I do have this big white box here. I want to know where it's coming from. So I'm going to go to a 5-year chart. Oh, goodness. It's still not visible where it started. So I'm going to go to a monthly chart. I still can't see it. I'm in the 1999 area, and I still can't see it. So I'm going to zoom out a little bit more. So this box that we were just looking at, we're at the upper end of it, has been a pivot point since 1996. 96. So tell me it's not an important zone. So what does that mean? It's usually pivot zones are sticky. They usually don't slice through them. So I can assume it's going to be support. Well, that's not good because it's also sticky, so things can't get out of it either. That's why I prefer selling downside risk. So I know there's value in AT&T, so why don't I sell puts and put spreads in order to play the upside without even needing a rally? So the only way I could lose is if AT&T follows through my levels. And I bet you I can find good premium to sell risk down in the $28 area. And let me go check on that. Okay, so if I look out to November, I know it's way out in time, but this is a boring trade, right? I don't have to babysit. I'm going on vacation. I don't want to pay attention to it. I'm busy with work. I don't want to pay attention to it. So I'd like to find trades where I don't have to do that. So a 28-27 credit put spread, bull put spread, it's a bullish trade. It pays about 20% yield on the money at risk. So I collect the premium. And if the price stays above my level of risk, which is in this case 28, then I keep the money that I collect. Otherwise, I risk in this case about 80 cents. So per contract. How do I lose? I lose if this crashes through 28 and through 27. If we lose 30 and a half, we could trigger a head and shoulder pattern that would probably get to 28, 29. But look what happened last time that happened. We had the world end in last Christmas, and it fell through 27. I don't anticipate the same level of fear to happen this time. Because why? Because the Fed is on our side. So R being the stocks. So I'm comfortable. Now, if I want to own shares of AT&T, I don't mind owning shares of AT&T. I can sell the $27 put naked and collect a nice premium for it, 50 cents maybe. If I sell the 28, it was like 62 cents, 63 cents. And so it's a hefty premium that I collect, and the only way I would lose is if it falls below it. So what happens? Then I own the shares. That's the only thing that happens. I keep the money I collected. So my break-even point would be about 27 and a half. Anything below that, I start accumulating losses. So if I go to a 5-year chart, it would have to go way below that for me to start accumulating losses. So in the last 5 years, it hasn't gone there yet. Is this the year it goes there? So if it goes there, I bet you the whole market's in trouble, and any assumption I make on any upside of any stock then will be in trouble. So what if I wanted to go lower than 27 or 28? I can go out to January contracts and drop it $2 lower. So same concept, same conversation, only like at 25, 26, 24. The credit put spread can be $1 wide, $2, $5. $1, $2 wides, I don't worry about them if they get in trouble, because I'll just take the stock if they go there. It's not a big deal. That's why I like them. You say it's boring. Well, let me rephrase it. If somebody tells you there's a trade that has a 90% odds of success, risk a little bit of money, can yield 20%, and I don't even have to look at it for 6 months, I'll take it any day. So that's how I rephrase the fact that it's a boring trade. Yeah, it's boring. But what if I wanted to also play the upside? So I'll take the boring part, I'll collect the money, and then I'll use the money to buy some upside calls. So if I'm one that likes to take upside calls, so why don't I sell the puts or put spreads and buy some calls or call spreads or buy the stock? So depends on how I like to bet on the upside. Different ways of doing things. Okay, so is this a foolproof strategy? No, but it's statistically viable to where it has theoretical odds of success. Selling puts or put spreads the way I just talked about them for September. You can do it shorter in time, higher. Is the type of trades that I'd like to do. If I sprinkle enough of them and the markets don't crash, collapse completely, and sustain a collapse, then these will pay money as they start expiring. So these are my thoughts on AT&T. So to summarize, it's a good company. It has good value below, so that's support. It pays a dividend. That's big support. It's a 6% dividend right now. And if markets, I don't even need an upside to profit, because my idea is, since we have all this value, I can sell puts or put spreads below it and just wait for time to do the job for me. Those who want to buy it, know that there's resistance here, through here, this whole zone. Technically, this is the resistance. Really, it's 33.1 and higher. Will open up. Something's going on. Will open up. A huge rally from there. So you have risk level down here, opportunity up here. The range, as soon as it breaks out, they're going to carry it higher or lower. At least I know on the lower side, I'm okay taking the heat. On the upper side, if somebody wants to take the hopium calls, go for it. Nick signing out.